For the recorder and those folks who can't read, it's July 14th. I guess that's Bastille Day if you're French. And this is the Trader Vision 2020 user workshop for tonight. I will be covering, well, I guess let me just start the agenda. Tonight we're going to cover a few things. The first thing is I want to give you a look at the new goal view and how that's going to work. I'm going to work through an example of it. I also am going to talk a little bit about goal setting, as I've received some questions about this since we let people know that this was going to be tonight's topic. So I'll give some pointers as best I can, and we'll talk about that. And then I want to look at a couple trades for Friday. I've actually got several charts, and I've got them planned, and we'll let people decide which they like best. And we'll run through the plans on them and tell you what we think. As always, we'll do as many questions and answers as you have. I will try to focus this towards an hour, but I have a bad case of Doug Campbell disease, and so you'll have to forgive me if I run long. And just know that I will try to answer all the questions, and we'll go from there. Of course, it will be recorded, and you can view it later if you need to. Okay, let's see. Oh, one other thing that I want to hit. If you want to have some influence on development, or you just want to give me some feedback, here's your chance. I'm doing one-on-one interviews. I'm trying to use Skype so that we can both be looking at the same screen at the same time. And basically, I'm looking for you to tell me what is working well, what helps you, and what should be left alone, as it were. What needs to be improved, what's missing that you'd like to see added, and tell me about anything that's confusing or that you don't understand. And of course, while we're doing this, I'll happily, gladly, and assuredly answer all the questions that you have, so that you come away with some value for your time as well. So if anybody's interested in that, please, lend me your opinions. Tell me what you think. Send me an email. That link should work if you click that link. And I'll set up a time to call you on Skype and talk. We'll keep it as quick as we can, but it will really depend on what all you want to talk about as far as how long it goes. And Richard, if there's a cure, I haven't found it yet. Maybe I'm the one that gave it to him. I'm not sure. So let me start with the screen sharing here. This will take a moment. Okay, come on. Okay, can everybody see my screen now? Excellent. Okay, well, as you're aware, this is what GoalView looks like now, and it's fairly straightforward. For each account, you have a starting balance, and to get from there to a goal in X number of months that you specify, we tell you what it will take per month on an average gain per month, and what is that in dollars, and then you decide how many trades you're going to make, and that will tell you what you need to average per trade. So one of the problems that we had here was the realism, because not all of the factors are considered, and of course it's considering the fact that you're going to win 100% of your trades, and therefore you need to fudge the numbers. So in this case, if I had been planning to make 5 trades per month, I would change this number to 10 to account for the fact that I know I'm going to lose some trades. and that way I'm winning enough on the winning trades to cover the losses. Let me show you what we're going to do here going forward. Let me just minimize that. And I'll wait for the lag to catch up here. It looks like it's visible now. So this is the new goal view, and essentially think of this as a three-step process. The first step is the green goals up here, which are, I'm not sure, let me get my drawing tools here. Okay, so up here is our goals, where we're setting our goal, and it's very similar to what we had before. We've got a current balance, we've got a goal that we want to get to, and we've got the number of months that we're going to take to get there. This then calculates us what we need to average as a monthly return. Again, pretty straightforward since it's almost identical to the process before. Where things differ is the second step is that we need to come up with a plan to reach our goal. So let's try this again. So to set up our plan for our goal, we do that here, and there are 4 sliders that will be drawn from history, but then we will populate with the appropriate data. And those are the average size of your wins, the average size of your losses, the win-loss ratio or the win rate, and the number of trades you do per month. Down on the chart, let me just go through the colors, and there will be a color legend, but the gray is our past performance, and this gray past the 0 line, so this is showing 2 years, the most recent historical year and 1 year into the future. This gray area here is showing us a projection of our average past performance. So what we might expect if we average what we've averaged in the past. Behind this red is a green area that corresponds to our green trade area, and that is our goal, or I'm sorry, our green goal area. So as we set our goal, that goal is outlined in green or colored in green. Our plan is colored in orange. I'm not sure if you can see it. Let me know if you can or not, but right along here is an orange line. So can you see that orange line? Excellent. Okay. That orange line corresponds to where our plan is currently at. And then this red area represents the difference between our goal and our plan. So we need to increase the value, outcoming value of our plan in order to make our plan meet up with our goal. And this is how we're going to tell if our goal is realistic. So in this case, let me just clear that marker. We can play with 4 values. We could increase the size of our win per month. We might be able to decrease the size of our average loss. And making those changes had a little bit of an effect. You can see now part of the green goal is visible. That orange line has moved up slightly. Perhaps we can improve our win rate from 55% historically up to, I don't know, let's say 60%. And again, that orange line has moved up, exposing more of the goal area. But there's still a significant area here, about 14.5%, where we're not coming up to par. So we're going to have to add, either dramatically change these other 3, or we're going to have to start adding trades. So we add 1 trade and we've picked up a couple percent, 2, 3, 4. So now instead of 5 trades that we've done historically per month, now we're at 9 and we're still 5% below. So if we can do 10, we're getting close. And 11, we are, just barely below where we need to be to meet our goal. But we want to have a little bit of cushion here. So let's just say that we change it to 12. Now you'll see this has changed to a yellow color. You can see that the orange line is now above our goal. So here's what would happen if we continued our past performance in gray. In green, we see what our goal was that we set, which was a 33% gain for the year. And we see that we've come up with a plan that will actually beat our goal by 2.5%. So it looks like our goal gets us to 80,000, right? And our plan gets us to something like 82, 83,000 over that same period. So now we have to decide, is that realistic? Can I go from 5 trades to 12? Can I go from 55% wins to 60% wins? Can I reduce my losses by $15 per loss? Can I increase my wins by $10 per win? Are those all realistic? Another way you can check your realism is 2.43% per month realistic? So that's the first step of setting our plan and making sure it's realistic. Here's the second part, and that's the lighter orange down here. In the past, we've been trading 2% of our account per trade, and that's been $1,200 based on the account size. That would mean that on average, we needed to average an 11% win in order to make that goal with the trade size. So we could increase the trade size. Let's say we move it up to 3% per trade, and that would drop us down to only needing an average win of 7.3% in order to make this plan and this goal. So again, if we get up to 4%, it gives us a yellow warning that that's getting pretty darn big. But it does drop down the average required trade to a 5.5% rate. Again, this is what you need to do in order to figure out if the plan is realistic. You say to yourself, well, okay, I think I can get from 55% wins to 60% wins. Yes, I think I can, add $10 per win and reduce my losses by $15 per loss. I can get from 5 trades to 12 trades. Yes, that's all doable. That's realistic. Am I willing to trade an average of 4% of my account per trade? Well, you have to make that decision. And if not, if you're only willing to trade 3%, then are you comfortable that you can average a 7.33% win per trade? If you only do what you've done in the past, which is 2% per trade, you need 11% average trade. And that's pushing it. So you need to play with these tools to come up with a trade. So you might say, well, perhaps instead of a 33% gain for the year, maybe we knock this down to 75,000. It resets our plan now, and you can see that there's a green line, very, very slight there that you can see, and that is the top of our goal. The orange line again is our plan that has been reset. And rather than go through the planning process, I'm just going to add trades here. So let's say that I go from 5 to 10 trades. I'm still about 3% short of meeting my goal. If I go to 11% or 11 trades, I'm 1% short. And if I go to 12 trades per month, which is more than doubling the number of trades I did per month, but it's not an unreasonable number by any sense. If there's 21 trading days per month, that's less than one a day. I'm going to beat my goal by just under 1%. So that might be a reasonable plan. And now you say, well, can I make 8% per trade if I stay at 2% of my account per trade, or $1,200 per trade? Sure, but what if I increased it to, instead of trading 2% per per trade. I trade 3% per trade. That increases it to an $1,800 position, but it reduces down to my average trade only needs to be a 5.4% win, and I think that's very reasonable. So I think yes, this plan is quite reasonable, and as long as I can increase my activity enough, this is something that would work for me. That's what the new process is going to look like. So it's again a three-step process. One, you set your goal. Two, you come up with a plan that will help you meet your goal. And then three, you see if number one, that is logical or reasonable numbers, and number two, are you willing to trade a large enough trade size to make the average required trade return a reasonable number? And that's it. That's how we will be planning our goals in the future. Now, I did receive some questions. First of all, let me ask if there are any questions about this. I know this is a quick introduction, and I know you haven't seen it before, but let me ask if I've completely confused folks, or if there are some questions about how this is going to work. Well, thank you, Art. Good, good. Okay. Well, it sounds like everybody's liking what they see, and they like the flexibility, and that's great. That's right in my ballpark because I come from a planning background, and it makes me nervous to have straight line one number plans. So I like the flexibility as George said there. It's like having night vision. Well, I hope we're not trading in the dark, but yes, that's I like it. It does allow us to consider more factors, and my only concern was, that I need to make sure, and I'll be happy to walk everybody through as often as I need. But I just want to make sure nobody is lost because there are now more variables. And these are all things that you need to consider, and they're laid out for us pretty well here, I hope. But it is change, and it is more things to consider, and so that was my concern. Okay, with the questions out of the way, and I'll answer questions later for sure. But let me talk about goal planning in general because I did receive a couple of questions about this. And these were questions that I got basically from new traders or people that were returning to trading after some time away. And they were not really successful before, which is why they stopped trading. Their question was, well, what should I set for my goal as I start off? How do I go about setting goal? What's realistic? How do I benchmark that? Well, let me give you the advice that I try to give all new traders, and that is, well, there's two components to the goals that you want to set for yourself. One is your average monthly return, and two is you need experience with the process and getting good at the process. So there's also a number of trades component to that. So let's just talk about the monthly return portion of that right now. And a good starting place would be to shoot for 1% gain per month. And I will come up with a handout of what what these all come out to, but I didn't prepare it for this evening. But I don't know what 1% comes out to, but because of compounding, it's more than 12% in a year. I don't know, 15 or some percent over the course of a year. So 1% per month is a goal, and that would be your first or starting goal. When you're good at that, when you're consistently able to do that, and you'll have to define for yourself if consistently means I did it 2 months in a row, or I did it for a year. Yeah, it's based on your own personality as to what you'll be willing to accept. But if you can do it consistently, and I would say, a couple months, then move your goal up. The whole idea of Trader Vision is to be a continuous improvement process. So we want to continuously increase our goals and continuously improve our performance. So we go from 1% to 2% as our goal. Again, when we are able to consistently reach that, at least a couple months, let's bump it again. And now let's shoot for 3 to 4% as our goal. And basically, I'd like the rule of two, but that is too aggressive for some people. So I would like to go from 2 to 4 and from 4 to 6 and 6 to 8. But I do know that that's very aggressive. So 2, let's go to 3 to 4. And when we're good at that, then we're going to bump it up again. And now we're going to look at, 5 or 6. And we're just continually, it's not so much the exact number that you use, it's the fact that you are continuously improving and raising the goal. That is the idea. The second component to your goal is the number of trades you're doing per month. And the important thing here is, particularly as a new trader, you don't have experience. And even if you're an experienced trader, you probably don't have experience with a strong trading process, or at least most don't. There are a lot of gunslingers out there. The idea behind Trader Vision is to help you build and enforce a good, strong, thorough trading process that considers your risk and your reward, and looks at many different facets. So the other thing that we need to know about trading is, no matter if we do everything perfectly, if we do everything right, there are still going to be losing trades, and we know that. So the point is that we can't control market gaps and the Brexit, and oil could shoot up or oil could collapse, and that could have a huge gap effect on us in the next morning. Those are things we can't control. What we can control is our process. And if we trade an entire trade and follow the process thoroughly and make no mistakes in our judgments, regardless of whether that was a win or a loss in dollar terms, that's a successful trade. And so our goal is to do X number of successful trades per month. So we've got to try to make 1% per month to start, and we want to try to make some number of trades. Let's say 8. That's 2 per week. That will help us build our experience. Our experience leads to confidence. Confidence leads to better performance. And again, it's the same as with the dollar or percent return goal. We want to continue to do a thorough job, a very good job, and when we're there, we want to add more trades so that we get more experience, we make more headway. And that's the process of how you go about setting your goals from a starting point. So, does that, there were some people that had questions. Does that leave any questions for anybody, or have you got a basic idea how to go about starting goals? I guess there's one other thing that I should mention, and that is your mileage may vary. Every person is different. So every one of us not only sees a chart differently, but we have our own risk-reward functions in our brain. We have our own risk tolerances. We have our own greed factors. And therefore, some of us are going to be more aggressive at setting our goals. Some of us are going to be more conservative. What I'm telling you is I can't tell you the exact percentages, the exact numbers, the exact dollars, but what I can tell you is you need to make the process something where you are able to attain your goals and move the goals up. a continuous improvement. That will continually build your confidence and continually improve your performance. It does you no good to set a goal of making 10% per month as a start because you're going to be sorely disappointed and out of the game very quickly. So it's really a starting point, as Michael points out there, and it's the idea of continually improving is much more important than where you start. You will get where you need to go. You just need to continually improve. And as you see how much you improve each month, you will see how much you should raise your goals per month. Yes, sir. Yes, Barry. You can, in fact, somebody I talked to said they wanted to start by planning with 1 month goals, and yeah, so the current balance is X and the goal balance is Y in 1 month. You can absolutely do that, and it will reflect it in TradeView. Uh, I'm not sure that I think that's a great idea. I think I would plan on a 12-month horizon, or at least maybe 6 months. But you can change these numbers anytime you want. So you can replan after each month, continuing to look at a 12-month horizon, or you could replan every 2 days. That is completely up to you. And whatever the plan that you save is for that account is what will be reflected in TradeView later when you're entering a trade. Any other questions? I see a couple people typing there, so I'll give them a second. Well, maybe they got their answer. Hmm. Linda, that's a good question. Yeah, my plan is to give you guys a week. Give the user base a week to think about this, review it. I'll present it again, probably in the trading room, just so people that could not be here tonight have a chance to see it. I want everybody to have a chance to look at it, think about it, ask questions to me about it. Um, I'm sorry, guys, I'm reading here. Uh, Anyway, I will give folks a week to think about it and look at it, and then we'll start the implementation. So it will not be out and sent out as an update, probably till sometime in early August. And that assumes that there are, yes, Pak, there is a recording, and I hope I pronounced that correctly. Um, there, this will be available probably in early August, and I wanted to give a chance for folks to give some feedback on it, uh, and answer any questions, make any tweaks that I need to make to to satisfy people and to help make this as good as I possibly can, and then we'll release it. So that's kind of the time frame that I'm looking at there, Linda. Um, Rala, uh, okay, I understand that you want to be positive. Um, Whatever your goal is, um, again, that's a personality thing of whether how much you're going to manage your performance, or do things to hit your goals. The important thing is to follow your plans and your trading rules, not force things. And we're trying to teach you not to swing for the fences. So not to go for that. I need a 50% win on July 31st, or I won't make my goal. So no, we want to try to avoid that. But I understand what you're saying. It's human nature to try to sometimes meet your goal. Uh, if you're more comfortable with plus zero point zero 0.01 or something like that, then start there. As I said, it's much more important that you continuously improve than exactly where you start. But I do want you to give yourself a goal that has some stretch to it. I mean, that makes sense to me. You don't want to you don't want your goal to be ridiculously easy, and you don't want it to be outlandishly hard either. So it's a happy medium you have to find. And as I said, every person's going to be slightly different, but that's kind of the guideline, the 1% that I tend to give people. Yeah, Lisa, you're correct. If you do it on a 1 month basis, uh, that that's really there's nothing particularly wrong with it, but you've got to bear in mind that you're going to have a bad month, and it could be a bad day or a bad week that destroys your month. So that's something you need to keep in mind. I I prefer to plan in years because that's how we tend to think. And you know, you might do it quarterly, you might do it 6 months, but again, it doesn't. That's not a huge thing. Let's see. James asks, do I think if we should review our trades on a monthly basis and see how we're doing in comparison to our goals? Yes, I do think you should uh, review your performance relative to your goals, and you should have a set process. Monthly is great. I do know traders who do it on a weekly basis. Every week they review all the trades from the prior week and make some judgments on what they did right, what they did wrong, what emotions they suffered, and what unexpected events or uh, outcomes happened, and whether or not it was a successful trade, regardless of the outcome. So, you do need to have that as a process. Whether you do it on a weekly basis or a monthly basis depends on a lot of things, like how many trades you do. As I said, I know traders who do three, four, 5 trades a month. I know traders that do. I know traders that have 40 positions open at any given time, and so it's going to be different. If you're doing one trade a week, you probably already know exactly what's going on with that one trade. If you're doing 20 trades a week, maybe you need to review things on a weekly basis so that you can keep things clear while you can still kind of remember. Win-loss ratio. Okay, Lisa is asking for the recording. I'm sorry. Uh, Lisa is asking, what should we consider a reasonable win-loss ratio at the beginning? Um, start with 50% and work yourself up. If you populate this thing, your history will dictate. You will see it'll pop up. This 55 is what is drawn from history here, and this is just mocked up numbers for the demonstration. But it is going to, as you improve, it's going to move up towards 60 and 70%. If you can get to 70, you're doing good and you're really on track. But shoot first for a 50% win rate, and then continue to pick patterns that perform and signals that perform in a management style that locks in profits, and you'll get to raising that number fairly quickly. Yeah, as George points out, paper trading is great, and I spoke to somebody about this today, or a couple days ago. The the concept of paper trading is great as a training aid. However, you'll never react exactly the same in a paper trade, no matter how much you focus on it or care about it, as if you have real dollars involved. So my advice to you would be to learn a little bit about it and get your feet wet paper trading, but then progress to small trades where you've got a few dollars on the line, and that will put some emotion in play, and that will help you identify what you need to control, and still not be risking the mortgage payment. So start with small trades. Yeah, Ernie, I understand what you're saying, and you know, yeah. Let's see what we can do here. Okay, you guys are answering each other there. That's fine. Oh, no biggie, no biggie, Ernie. Let's move on. Let's move on from this portion of our evening and look at some charts here. There we go. I'm going to wait for the screen to catch up. My tin can and string are not always up to speed. Okay, it looks like you can see my screen now. As we see, the SPY is, the bulls just don't want to give up. We've got a lot of wick, a lot of indecision up in here. Another doji today, but it was a gap up doji, and it was a positive day, up 0.5%. I do want to point out, you've heard Rick saying that we're getting stretched, and you can see the distance we are from the T line. You can see the distance we are from the 3 EMA. That's what the pink line is there. You can see the distance we are above the all-time highs. So, we are getting a little stretched. Here's another way to look at it. Let me draw fibs to this most recent high and the prior low. And you can see that we are now between the 38 and 61.8 extensions of that run. So there's another measure that says we need to be watching for resistance pretty close above, like 1 point above, 1.5 points maybe. So while the bulls are clearly in control and running the show, there's a lot of indecision here, and we are getting stretched. So just be careful out there. The Qs, similar story, even more of a doji, and they still have some resistance to work through. You can see I drew these fibs here, and we're approaching some resistance at the 61.8, which corresponds with these lows over here. So again, like 1 point above, we need to be watching for the Qs to hit resistance. So again, just be careful. With that said, I have got some charts to go through here with you. The first one is VZ, Verizon. And I'm waiting on the screen to catch up here. I think it's caught up. We've got a pullback here. You can see this was a beautiful long run, breaking out of a previous high. Gorgeous, gorgeous situation. We're at all-time highs, or at least over the last 2 years. Today we had a doji type, but if you look at this pullback, we're trying to form a J-hook here. We're at a PBO, and we've got a clear point here where we're, we have some support below. I would be looking at it to pop above that the most recent highs here at the bottom of this pullback and see what that looks like there. And then because we're at the all-time highs, I would be using fibs on this. Now, as I said, I love this chart, but let me pull up Trader Vision. And let's go to planned. There it is. There we go. So there's the VZ trade that I planned out earlier. And when I put it in there, let me move it over so we can see. I put it in that we're going to buy above this, above the recent highs here within this pullback. And in doing so, we would have our stop down here at 55. Well, guess what? That tells us that we're going to have a bad risk reward if we're looking at this previous high as our first resistance. The only way that we could do this is if we say this, we're not going to consider this as a target area. We're going to look at a target up at 58.81 perhaps. If we did that, it's still not a great win. You're looking at, even if you hit both your targets, you're looking at a 5.5% trade. Now it will make your goal, but that is not something that I would look at. So the point I wanted to make with Verizon is I love the chart. I love the pattern. We've got some clear support and resistance, but this most recent high makes it a non-starter. It was like 0.5 to 1 on our reward to risk ratio. And even so, I'm just working off of a doji. I'm not working off of a candle signal. I'm working mostly off the pattern here. And even if I can ignore this high, I'm still only getting to a 2 to 1 trade and a 5.5% overall gain. So I think this is something that I would pass on myself. The point I wanted to make there is that things that look good on the chart are not always good once we plan them out. So let's get rid of Verizon and go on to a couple others. On these last ones, I'd like to force you to do a little work here. What I'm going to do is show you 4 trades or 4 charts, and I want you to just tell me which couple you guys like best, and we'll show you the plans for those and go through what we're looking at. Some of these may have been, again, I haven't been in the room recently, so I apologize if Rick has covered these. Just let me know and we'll skip them. DHI, or DH Horton. Again, we've got a beautiful flag type here, a beautiful run up, and it needed consolidate, and now it is consolidating. We've got a clear breakout level above and a clear support level below to use for our stop. And I would use the 38 and 61 extensions of this fib run as my targets. The next one is PAGP. That's I guess it's a midstream, probably I guess they do pipeline. I would be looking for an inside day, mostly off of the strength of this kind of triple bottom here. We're above the 200, but we've made our bottom. We've got a nice trend going here, and it's, let me shrink this up. So we've got a beautiful trend going here. We've also got this kind of triple bottom. In there, and we're approaching the breakout. So I would probably consider looking at an inside day, but ideally I would be looking for a breakout above those above these 2 highs. So 1153, something like that. The third one was pointed out just earlier, right before the presentation. I believe David Smith pointed us out. It's a utility. I honestly like this electric utility. I'm not sure where, which country, South America someplace. But you can see this beautiful rounded bottom. You can see the guppy belly in the 20, which is green on my chart. And we've broken out and we pulled back and we held, and now we're breaking out again. And once we break through this level, these most recent highs here, look at that big beautiful gap. So with a stop here about 854 and an entry someplace right above 884 or 883, someplace right above there, you look at a 966 and a 1033 as your goals. And the last chart then is a Harami, bullish Harami, again an RBB type. We've been in a long-term downshed. We're trying to form a base here. We've broken above the 50 to become an RBB, and we've pulled back. And today we formed that bullish Harami at the 50. So we're, number one, fighting that 100 that Hogg talks about as being the initial resistance after the breakout of the 50. And you can see where that's the case. And so I'm going to be looking for a breakout above 1173. I'm going to be keeping a stop tight here, probably based on these lows in here. I'm going to be looking at about 1130 as my stop, and my targets are up here off of these highs and lows, so about 1230, and again off of these highs and lows about 1275, and possibly by that time the 200 may be down around that area. So which of those four, or any of those four, do you guys like best, or do you want to see a plan on? Okay, well, it's looking like the volume on these, as you can see here. Um, for those people who don't know, and I apologize about this, um, here's how I look at liquidity. I use two measures. The first one is a 63-day average, which is 3 months, 3 trading months, of volume times the close. And what I'm looking for is that number to be above $2 million a day. For a small position, that will give you enough room to get in my opinion. The second thing I'm looking at is the minimum volume times the minimum close over the last 10 days, and I want that to also be above 2 million. I don't want to get into anything that's had low volume days or low liquidity days here recently. For all of these, the actual numbers are much higher. So D.H. Horton is doing $117 million of stock traded a day on average, and over the last 10 days, 92 million has been the least it's traded. PAGP is 39.5 mil on average, and 17 most recent 10 days is the minimum. ENIA is just under 9 million per day on average, and 4.3 million minimum the last 10 days. GTN 8.4 million on average, and 3.2 million the last 10 days. Okay, with that said, it looks to me like ENIA and GTN seem to be the ones that we want to look at. So let's again go back to the charts real quick. ENIA, again, we've got this rounded bottom breakout, and then we're pulling back and consolidating, and now breaking out of that pullback once we got through. I get volume expressed by dollars by multiplying the volume times the close. So again, on average, I look at a 63-day average volume, and that is some number of shares. And I multiply it by today's close. And that gives me an approximation of the average daily liquidity in dollars. Because I invest dollars, I don't invest shares. Um, if I'm going to have a $5,000 position, I want to know that it's trading $2 million worth of stock per day so I can get in and out. Even if a $10,000 position, I'm pretty comfortable I can get in and out if it's trading $2 million of stock per day. And all of these are actually trading many times that. Okay, so we've got a breakout here that I'm just going to say, based off this high, is about 883. So we're going to look for an 884, something like that, 885 entry. I put it into TC2000, and I can show you how to do that afterwards. Let me finish up this and remind me. I'll come back to it if I don't remember, James. I'll just remind me. So pulling up the plan on this, let's go to trade log. No, let's not save this changes. ENIA. And this was planned about 1 minute before the start of the webinar. So that tells you that we can do things quickly. ENIA, it's a long, the SPY is trending up in the short term. The SPY is above the 50 and the 50 is rising for a longer term market bias. Today I'm calling that a doji. You can call it a spinning top if you prefer. In either case, it's indecisive, so there is a little bit of risk here. I'm calling this a rounded bottom breakout, and it's actually the first pullback after the RBB. And I'm looking for a breakout of that. So I'm looking for an 885 entry, a couple cents above the most recent high, about 4 cents above where we're at now, for a breakout. And I'm looking at my targets about 965. I just pulled that number because we're in a big gap here. We're in this big gap. So I just pulled that number out as reasonable. I can't draw a fib here to really fill that. And let's say that I use the filling of that gap to this other low over here at 1033 as a second target. And let's make this 150 shares. And this 150 shares. So our plan would look like that. We would have a little over a 12% trade, just under 2 to 1. Probably close enough for me to risk because I'm very close to making my goal for this account, and you'll have to look at it for your own account and your own goal. But for this particular account, which has a very high goal, I can make that on that first leg or that first target. And then I'm into gravy. And truthfully, when we get into a gap like this, I'm expecting little resistance until we get up into the higher end of it. So I might even make this into a three target trade where I would put the third one probably someplace like, what's that look like? Yeah, that looks, pretty good there. So this low, which corresponds to these highs in here. So 1125 might be a third target on this. And I like to have one entry and 3 targets. I don't know why, but that is the way I was taught and the way I like to do it. And it, for whatever reason, happens to match up very closely with our buddy Doug. If we added that third target and we broke it down into 100 shares per position, this is a nice trade. It's 16.5% overall. We're still just under 2 to 1 to that first target, but it's nice because we've got this very very nice tight stop on this, and that's a nice position. And so I want to thank David. That was a great catch. George, personally, I like to have above 2 to 1. I'd like to get 1,000,000 to 1, but you can't always get it. It's a function of how close you can set your stop, and be reasonable, and how close the first target is. I always try to be conservative by picking the area of first resistance as my target, and I want to have a reasonable or support-based uh, stop. I don't want to just arbitrarily say, because I need that number to be X, I'm going to put my stop there. I want to have support that shows there that, I'm letting it test, but I have support that will stand up for my stop. Let's look at the GTN then. GTN is a Harami, RBB as well. You can see we've been basing here. We have an inside day, or Harami, right at the 50. So we broke up through 2 days ago, hammered back down yesterday, and the T line said, "Yep, we're gonna hang here." We got some support off the T line, and today we're back up above the 50. Two things in play here: we're fighting that 100 resistance, and we're getting support from the 50 and the T line. So I'm going to use this 100 that matches up with these highs, matches up with some lows over here, matches up with some highs here. So I got several touches, and I'm going to use that 1173 as my breakout area. These highs here and here, lows there, highs over here, lows over here. I'm going to say 1232 is a logical target. It's probably pretty close for us, but nonetheless it's logical. And then the highs here and lows there make another logical target about 1275. However, once we're past that, now we're looking at running clear up into this area up here, clear up around 1494. And if you want to be conservative, you pull this down and say, okay, well, let's set it down here where we're picking up this shelf and picking up where we closed, or where we opened on this this big bearish belt hold day, bearish engulfing belt hold day. So if we use those as our numbers, let's see what we've got. GTN. Again, we've got SPYs trending up, both short and long term. We've got a bull Harami today. We've got a rounded bottom breakout. I'm going to say that we want to get in. Well, let's make this 1175. And I'm going to leave my stop about 1130. 1232 is my first target, and 1275 is my second target. 100, and let's make 1450 for argument's sake as a third target. So what's that do for us? Huh. That would be nice, wouldn't it? Okay, so what does that do for us? Well, at the first resistance up here at 1232, we're only up 4%. So that's pretty rough if we want to try to shoot for that. That second target is a little more reasonable. These highs here, these lows here, and gets us into a 7.8% trade. Again, it'll depend on your own goals, but for this account with very high goals, I need 6.6% to make my numbers. And if I can make it up to this third goal, or third target, which is up above the 200, so you have to bear that in mind. But if I were to make that, it would be make for an excellent trade. The problem that we run into here is this is only a one-to-one trade. The only way I would take a one-to-one trade is if I had enough room here to this first target to make my goals. So for this account, with these high goals, I know that the goal is real high on this account because I was doing an example for somebody. But with those goals, this thing is not going to make it to the first one and just barely makes it at the second target. So I'm going to pass on GTN. So this is another one that's like Verizon. I like the way it looks, but the numbers don't work out. And I'm not going to adjust my numbers to fit, to make the plan look good. I'm going to pick another stock because there are, you know, 10,000 stocks. There's no sense settling when you can find a better trade. Let's take a look at this DHI, DH Horton. Somebody else or a couple people had pointed that one out. So let's take a look at DHI. Okay, on DHI, we've got this consolidation or flag after this beautiful run up. We've got a clearly defined bottom to this area, so we can set a stop about 33, 65 or something like that, and say if it falls down below there, it has given up, it's rolling over, but that should hold for us. And we've got a clearly defined breakout area. So in this case, we do have what I'm calling multiple dojis. I'm calling this spinning top today a doji type. So there is some risk there, but we are in a consolidation. And otherwise, on a breakout, I think this is a nice chart. So I've got an entry of 34.27 just above these highs. My first target is up here at the 38.2 extension, which is 36.22. And my second target is at the 61.8 extension, which takes me up to 37.42. And you can play with those numbers as you want. If I do that, what's this look like? Well, I don't quite make my goal at the first target, but again, I know this is an aggressive goal, so maybe this is going to work for your account. And while it's only a little less than 9% gain to that second target, there's nothing to say that it'll stop there. We just know that we should expect consolidation at those points along the way. There's nothing to say that this won't continue to stair step on up. So particularly for a position that might be a little bit longer term, so not something that I'm looking to swing in and out of in the next 3 days, but perhaps something that I'm looking to hang on to for a month. This might be worth the ride because there could be some upside here. The nice thing is we do have a 2.6 because we got that really tight stop. We've got a 2.6 to 1 initial, so to our first target and our stop. And so that's that's nice to have. We're really only in this position risking 71 bucks, and you can afford to roll the dice on 71 bucks and put that a position in there and see how it does over some time. Be a little bit conservative with it, just keep moving that stop. So that's the trade plan. Do we have any questions? We've planned out a few trades for you today, and I think the ones that look most promising are DHI and that, what was it, ENIA? Yeah, ENIA. Okay, Rich, yeah, let me answer that. So those things are not quite related. Hold on just a sec. Sorry about that. I had to take a drink. Those things are not quite related, but they are in the same ballpark. What what you've done is you set the account up to have a maximum dollar risk. However, it then tells you how many shares you can buy to stay at or below that dollar risk. That is not related to, it's not considering what percent of your account you want that to be. That is something we're considering possibly for the future as a third way to let you plan your share size. But it's actually a separate consideration at the moment. So on this particular trade, I told it I wanted to risk no more than $250. That's the maximum risk to my stop I'm willing to risk. And it says, okay, you can buy 384 shares and stay below that $250 risk to your stop. I decided, well, even at 384 shares, that's way too big of a position size, and so I'm not going to trade 384 shares. Let's look at 100 shares. So it is a two-step process. There are different variables, and they're just in the same neighborhood, if that makes sense, Rich. So the question is that you had posed earlier today. Um, what you are not set up incorrectly. It is just that the maximum dollars that you're willing to risk will result in a different percentage of account based on the price of the stock and the size of the account. So, this $250 is something that, if you wanted to stay below 3% of your account, then you needed to set $250 as some other number that's a lower percentage of your account. Perhaps you could set this to $200 or whatever your numbers are. But if you set that to $200, then it would say, well, you can only do 304 shares. And even so, that's still going to be too high. Okay, so you're going to need to adjust that maximum loss per position that you're willing to take to have a relationship to the percentage of the account that you want to hit. Otherwise, it's just a two-step process, and it's not that hard, in my opinion. Okay, we can talk about this. Maybe we can do some PMs afterwards and talk about that. But yeah, it's you're not set up incorrectly. There are no problems with the software. It's just a different setup. Are there any other questions? Okay, let me slip back here to the slides. And again, I want to remind you, I need people to interview. And this is your chance to have some input as well as get some one-on-one time with me where we can both see your screen and talk about things you don't understand, things that are confusing. Basically, I want to know what to leave alone, what is working good, and what needs to be improved, what needs to be added, what you're thinking as we're planning for version 2 functionality down the road here. Okay? So again, ed at tradervision2020.com. And I would appreciate you reaching out. I would love to talk to you and see if we can't get some input. I see people's typing, so I'm going to hang on for a moment. Okay, it looks like most of our questions are answered then, so I'm going to turn the recorder off.